So in a previous video, we talked about the basic accounting equation and also about debits and credits. And we said that debit essentially means left, right? So we'd have debit here, and then the credit just means right. And how do we apply that? Well, we say when we have any kind of account involving an asset, such as inventory, it's going to increase with a debit because debit means left, and assets are on the left-hand side of the accounting equation. Conversely, liabilities, stockholders' equity, those types of accounts, something like accounts payable, those are going to increase with a credit. But we didn't really explain what these debits and credits, where they actually go in practice. What are we debiting or crediting? And that's what we're going to talk about right now. So debits and credits are basically things that we do in a journal entry to record a financial transaction that's taken place. So let's illustrate this with an example. So let's say that you have a business that sells custom t-shirts. Okay, so the business is custom t-shirts. And you don't manufacture your own t-shirts. You buy them. Let's say you buy blank t-shirts from some company, and then you go ahead and you print unique logos, and then you sell the shirts. So you decide that you want to purchase, you buy $25 t-shirt that you're then going to put your own logo on, and then you're going to resell. So when you buy this from the manufacturer, what you're buying is inventory, right? So that's an asset, okay? So we need to record this somehow, right? We can't just write this down on a napkin and hand it to our boss. Well, I guess if you're the owner, you're the boss. You still don't want to be writing it down on a napkin. You want something a little more professional. And so what you'd have is you'd have financial records, and you'd most likely have some kind of software, or you could even use Excel. But you're going to record this transaction of buying $25 for the t-shirt. So we need to think about what's happening here, and then how are we going to go about recording it. So we're adding inventory, right? We're adding a t-shirt, which is inventory, and it's worth $25 because that's what we paid. At least that's what we're going to record it for at our cost in inventory. So now we're going to make what's called a journal entry. So this journal entry, we're going to say, okay, inventory. I'm going to write that down, inventory. And we don't have to write this, but I'm just going to write it for your use. We're going to say that's a debit. We're debiting inventory for $25. Okay? So that records the fact that now we have this t-shirt that we didn't have yesterday, so our inventory has increased by $25. But there's also something else going on here. So let's say that we paid cash. We paid $25 cash for that t-shirt. Well, cash is an asset too. So now we've got a corresponding reduction in an asset account. So we're going to do what's called credit. We're going to credit cash. Okay. Say that's a credit. Why is it a credit? Well, we talked about when we have an asset, assets increase with a debit, right? And then the opposite, if we decrease an asset, we decrease it with a credit. So here, we're increasing inventory, an asset, with a debit, and we're decreasing assets, in this case cash, with a credit. Okay. So the assets are going up and down at the same time. It's going up $25 because of this, and it's going down $25 because of this. Now you'll notice that I indented the credit. Okay, that's just a common practice in accounting to make it a little bit easier to see when the credits are occurring, because normally you wouldn't be putting debit or credit necessarily in parentheses. You would just put inventory 25, cash 25, and then you just make this indentation of a credit, so that if somebody else, some other accountant or somebody is looking at your work, they can easily see, oh, okay, we've got a credit there. So you can just easily look at the transaction. You debited inventory for $25, and you credited cash for $25. Now notice that the debits always equal the credits. Okay, so no matter how many different things we have going on, no matter how complicated this transaction here is, we're always going to have where this column here, the debit column, if we added that all up and then we added up everything in this column, those two columns would be equal. Now, why is that the case? Well, because we use something called double entry accounting, which I'm going to talk about in one of the next videos. But basically, this accounting equation that we talked about before, it always has to remain equal, both sides. And so if we're increasing assets by 25, then either we need to increase this side by the corresponding amount, or also have a transaction that decreases the assets. So we're going to talk about that in the video on double entry accounting.